morning, everybody. You're watching SmallCapSteve Live. We got Craig Hemke, a.k.a. Turd Ferguson, joining us today. Always has great hot takes on anything central bank related, gold, macro. Going to get into the producer price index number that came out this morning, talking much higher than what analysts and economists were forecasting. So shaking things up a little bit. Market's feeling a little bit flat. Gold's down, oil's down. Buckle up. Let's get started. Craig Hemke, welcome back. We're really excited to have you.
Hey, thanks, guys. Nice to see everybody.
Yeah, it's when we saw your name on our calendar, both Jay and I are super excited because last time you were on here, it was just a total blast. So let's start off with the big headline of the morning. The producer price index came in at 1%. Economists were expecting about 0.4%. What's your take on this?
Well, I just think it's funny that this surprises people. And maybe we're all everybody's just too busy these days to stop and actually think ahead. I mean, Powell even told us what to expect 3 weeks ago at his press conference. He pointed out that there's a coming spike of inflation, if anything, because on that 12-month rolling average, the year-over-year number, that on the PPI, what was it, 4.2% today?
Yeah, I have it at 4.4, yeah.
When you calculate the last 12 months, you're including last March and last April on the back end, right? And last March and last April was right when all the COVID lockdown and shutdown and everything else was going crazy. They were actually negative prints. Mm-hmm. So as you replace March 2020 with March 2021, of course inflation is going to spike. I mean, that's just, you just had to think about it ahead of time rather than, and not a lot of, it's just not a lot of people paying that close of attention. So you got this number, you'll get probably a pretty good CPI, Consumer Price Index number on Tuesday as well. And then the numbers we're going to get next month for April are going to be the same. What's frustrating to gold investors and silver investors is, this price that you see in the futures contracts is not in any way indicative of physical supply, demand, or anything like that. On an intraday basis, the price just jumps around based upon whether the HFT algo computers are buying or selling. And the key input, or one of the two key inputs for the computers making that pre-programmed decision is, well, what's the bond market doing? The other one, maybe what's the dollar doing? Mm-hmm. Well, the bond market trading today off of this higher than expected inflation number sold off a little bit. It's come back since. So as bonds go down, the computers react by selling gold. Mm-hmm. And it doesn't matter, what the bigger picture is. Doesn't matter that, at least on the PPI level, you've now got a negative real interest rate of more than 2%. That doesn't, that matters to you and me. It matters to thinking human beings, but it doesn't matter to the computers. And so all of a sudden you look up today and gold's down $25 at one point. So that's how all those dots come.
It felt like gold was on the comeback yesterday. I think at one point we were up above 1750.
Yeah.
And I was starting to
Steve, you know what the problem is? You got excited about the price of gold.
my phone was lit up with CEOs of gold companies.
You killed us.
Calling me.
It's like you're the cooler at the crab table. Everybody's having a good time until Steve gets excited about it. Now I know. Well, actually, if I might take a second and explain why, Steve, you should be excited. First of all, no downtrend goes on forever, right? Mm-hmm. Unless, it's some dog shit stock where it goes to zero. Eventually, any downtrend is going to break, and nothing goes to infinity either. So every uptrend is going to break and pull back.
Don't tell that to Bitcoin bulls.
Oh, that's true. Well, it had its break, right? It had its break from 18,000 down to 4,000. So anyway, we've been in this downtrend and consolidation since August. Continued longer than I thought. but it's not going to go down forever. We tried. There's some logic, if you will, if you can apply logic with technical analysis. There was some logic why we bounced initially at 1780. We tried to double bottom at 1780 earlier this year. There was a reason why there was support there. It was because back last year at this time, 1780 was resistance for about 100 days. So a lot of times what had been resistance becomes support and vice versa. So as we came down, we bounced off 1780 a couple of times. We thought, okay, maybe that's it. Well, no, broke through 1780 about a month ago. And when that happened, you had to figure, well, that range from last year was between 1680 and 1780. So you think, well, okay, now we're probably going to 1680. That's exactly what we did. And now we double bottom twice. That's redundant. Off of 1680. And that happened the last couple of weeks. So now we're moving higher again. The potential is, we're still moving back up to hopefully get out of this downward channel that's contained us since August 5th or 6th. That would take we got to get up back, really back to that 1780 level, and then everybody will start getting excited. So there's reason to be excited yesterday that we're moving up to 1760 or so. We've had a 5 or 6 day winning run. We're due to kind of work a little of that off, but I think the trend is reversing and moving in our favor.
That looks like a massive cup and handle to me, but
right, exactly.
I'm not a huge technical analysis guy, but that's what it looks like to me.
No, it's exactly what it is. And the other technical term, if you want to put that chart back up, in the upper right-hand corner, if you can zoom in on that, that's a bull flag. Okay,
the one
where you break out and then you flag downward. And everybody, so if you got a line, draw a line from that very peak.
See if I can add a line here using this.
I think you guys zoom out a bit there, Steve.
Like live TV, this is fun stuff, but this isn't to watch.
That's how much technical analysis I do.
Yeah, if you can put a little line up there at the very peak in early August, up near 2100.
Let me.
All right, you do that, and I'll keep talking.
Keep talking, and I'll work on it.
You want me to pull up TradingView there, old man?
Yeah. You do a screenshot shot there, Jordan, and pull it up.
All right, this is the thing to watch. Yeah, it's that cup and handle. It's that flag. Everybody's waiting for to break out of that flag. It looked like we were going to do it in early January, the first couple trading days, and then boom, the bottom falls out and we get driven lower, and it's been downward through the whole first quarter. That trend line, that flag line, if you will, it's about 1775 or 80 right now as we speak, and I just told you about the importance about 1780. So there you go. Look at that. That's close enough. You get the idea. You get up and start breaking out. If I were to just maybe make a long story short, let's get above 1780. I mean, your enthusiasm, Steve, is good. It's rightfully placed. But for now, we're just in that range again, like we were a year ago at this time, between 1680 and 1780. Start breaking out above 1780, get above that bull flag line. The thing will kind of start running on its own electricity. But for now, we'll just see where we go. Hopefully we're headed that direction. Days like today kind of tend to dampen your enthusiasm a little bit, but I think we're going the right way.
Mm-hmm. So we were talking with Mark Chandler, who's a currency trader, yesterday, and this idea came up about what's really holding the US dollar up, right? Like you think about running these dual deficits year over year for since the 1990s, where every year on a fiscal level you're running a deficit, and then on a trade level you're running a deficit. What do you think holds the US dollar up at this point? Is it I think Mark's idea is sort of like the fangs, and this idea that people still want to invest in US equities. Do you think that plays a role? Do you think it's just that there's a lot of debt that just gets placed in US dollars? What's the simple reason that the US dollar maintains with everything that's sort of gone on over the last 20 years?
Well, there's a smaller point and then a larger point. Smaller point is, you hit on it, a demand for dollars, right? The world trades with the dollar as the reserve currency. And what is it? We're 60% still of all U.S. trade is conducted in dollars. Okay, so there's always a demand for dollars. So that helps. The bigger point, though, is you mentioned the dollar being strong. Well, compared to what? Right? I mean, the dollar index, is that what is? I mean, that's what most people refer to. They, well, the dollar's stronger today because the dollar index is up 20 cents or something. But what's a dollar index?
Mm-hmm.
I mean, you're just comparing the dollar to a bunch of similarly worthless and devaluing fiat currencies. And so if they're all going in the toilet and being printed to infinity at basically the same rate, then on a relative basis, they're not changing against each other.
Mm-hmm.
And so hey, look at how strong the dollar is. Well, I guess it's strong today because it's the euro's turn to be, being devalued in a sense.
Mm-hmm.
And so that's all kind of relative to look at it that way. So on a bigger point, if some alternative was ever presented in the global currency arena to something that had maybe more confidence behind it or an asset backing or something, well, then you'd really get a chance to see if the dollar is strong or weak. But for now, if you're just going to compare it to yen and euro and pounds and all the rest, is it strong or not? Just relative to the others.
Mm-hmm. So let's talk about also in the news here, your favorite person in the world, Janet Yellen. I know how much you love Janet.
Mother.
So she's going around. She's talking about a sort of global standard for a minimum on corporate taxes or corporate tax rates. How possible do you think this idea is?
Talk about herding cats, right? A number of things come to mind. When I saw that, the first thing I thought of was, how arrogant is this? The U.S. is trying to dictate to every other country in the world what their tax rate should be. Business is out of ours.
Yeah.
And then
you can almost hear the birds being flipped.
Right. The next thing that comes to mind was the old line, the George Bush line about they hate us because of our freedoms. No, I think a lot of people hate us because of our arrogance in that regard. Who are you to tell us what to do? But they don't disagree with the U.S. though, because we'll cut off your access to the SWIFT system. Things like that. Mm-hmm. So anyway, I love my country. I just don't like the bankers and the politicians that are running it. Anyway, Janet Yellen is a far left politician.
Mm-hmm.
Right. You've seen that in the programs that she supports. And she is, and don't get me wrong, she's a politician, just like Powell's a politician. Do you ever watch Powell's press conferences? I mean, the dude excels at saying a bunch of words and saying nothing at the same time. And so, I mean, they're all, in this deal where they try to, keep the plate spinning. And now we've moved into this modern monetary theory world where it used to be that was kind of joked about. Well, clearly that's where we exist now. And this where, you can just print as many treasury bonds as you want and the Fed will buy them all, monetize them all. The Fed owns the debt. And so what's the problem? That's how they say they can afford all these multi-trillion dollar programs. And then no one even gives us a second thought. You've now got the lady that used to be the head of the Federal Reserve gets replaced by Powell, and now she's running the Treasury Department. Mm-hmm. That's never happened before.
It sounds like the pathway to MMT, doesn't it?
Right, exactly. They got to work hand in glove to make it all happen. So anyway, the idea that she would presume to be able to dictate to the rest of the world what their tax rate should be. I mean,
yeah,
that's what I would do if I were them.
Jay and I live streamed that speech that Biden gave from Pittsburgh when he introduced that infrastructure package, and we got into a little bit of a bet over what would happen with tax rates. I don't think that they're going to move tax rates up at all. I think that it's just too easy at this point for the politicians to just try to fund everything via.
Why even pay taxes in the first place?
Well, that's where we're heading towards.
Yeah,
absolutely. That's where we're headed.
Because you've got universal basic income as well. You got to pay for that.
Yep.
And so that's going to come from more debt monetization by the Fed. And Powell has said, and even all the rest of his goons that come out on a daily basis, is begging for more stuff from the Treasury Department to monetize because they're so worried about liquidity and deflation. And so all this is just going to keep coming at you faster and faster and faster. If again, we're not in this theoretical Stephanie Kelton as an economics professor writing on a grease board about how this can happen. This is now happening, this modern monetary theory stuff. And again, if people don't know what we're talking about, just Google it and then read what it is and then read the headlines and then, try to connect the dots. It's not too hard.
Steve, what was the bet on specifically? There's a new tax coming in. I can't remember what it was.
I believe he said that he was going to raise tax rates on anybody who makes over $400,000.
Over $400,000
a year, and then also, of course, he's going to take the corporate tax rate from 21% up to 28%. Which, again, like it seems like a pretty bad idea when you're trying to stimulate your economy after businesses have just had a lot of businesses, anyways, have had a really rough year. Some have had a great year, but it's just like now you got the people who support you through your election that bring in those big sponsorship or donations to your political campaign that you're saying, yeah, we're going to raise tax rates. They're not going to be too happy about that. It seems like they're just going to do the most obvious and easy thing to do. If you are a politician these days, is just count on just call up Mr. Powell, right?
Well, but at the same time, those people, they don't like people that make money. And to much to the left, to me, anyone that makes $250 or more has a lot of money, right? So basically, the genesis is 400,000 seems so out of reach that they'll bring it down to all the wealthy, like 200,000, 250,000 incomes, rather than 400,000.
Where do you fit on that bet, Craig?
Well, one, that's always the fallacy of it, right? We're going to make people pay their fair share when you're already paying in a progressive tax scheme. How is that fair in the first place? That I'm paying, or I or anybody else is paying 30% when there's some people paying nothing. That's not fair. But we're going to make it fair. Yeah, it's all theater, right? I mean, it's all done for the political. We're going to rile up the base or whatever. Or we're going to make people think and that's really what this tax idea is, that they're going to raise taxes somehow to pay for all of this infrastructure spending that they're going to pay for jack, right? They're just going to print it, man, and the Fed's going to monetize it, and that's just the way it's going to be. But to make it, you got to keep up appearances.
Yeah, that's a good point.
Right, to make it seem like, oh yes, well, we don't want to pass this just on to our grandchildren. We got to be responsible and blah blah blah. So they run out these talking points about higher tax rates, just so that the average person that's not really paying attention goes, oh, okay, $2.5 trillion. We're going to raise taxes on all the rich people to pay for it. Yeah. But that's not what they're going to do. I mean, they may try to raise taxes, and maybe they will, but that's not going to the sum of the sum of what they bring in extra revenue allegedly isn't going to equal $2.25 trillion. Give me a break.
These are the conversations I have with people in my everyday life. I mostly associate with people who are probably further on the left side than the right side in my personal life. In my professional life, I'm mostly talking to people who are on the other side of that. But like what you're saying is exactly that sort of mindset, that none of them understand how our whole fiscal and monetary system is set up. It's just kind of exactly what you just said. Make those appearances, make them think that like there's some sort of tax system designed to actually pay for everything, when nobody seems to understand this concept of an indirect tax, which is when we print money, we're taxing you.
Right. That's where they're really sticking it to everybody. But look, let's just leave it at this, man. I would rather not. I'd rather just be the guy, with the six pack and taking the wave runner down to the lake for the weekend and just not even care. Yeah. I mean, look at me. I'm 55 years old. I got all these lines on my head. I don't want to do this. I don't want to care, because really, what does it matter if I care anyway? It's not going to change anything. So, I just try to warn people.
Yeah.
Hey, look, this is what's really going on. You'd better protect yourself. And part of that really is, I mean, I know SmallCapSteve owns small cap stocks because they're not going to let the stock market go down either.
Exactly.
So you got to protect yourself against this, understand what's going on, but there's no sense getting mad about it because all you're going to do is, again, God, look at that.
It's such a good point. After all the quantitative easing stuff happened, I got a little freaked out. I started buying a ton of precious metals, and then, didn't do so well from like 2010 to 2013. And then I said, you know what? I'm too bored sitting around just being long gold. So I'm going to go back into what my whole thing is I like investing in small cap stocks. And I realized I think Tony Robbins actually tried to write a book about this, about how no matter what happens, and I was joking. I actually have a direct message from Tony Robbins in my Twitter feed because I trolled him on it on Twitter back in 2009. And he wrote a book, and the whole thesis of the book was the next time there's a market crash, and there will be a next one, don't worry about it because the Fed is going to print a ton of money, and that's where you're going to make crazy returns. But I don't know that that's ever going to happen. I don't know that they will even let a serious market correction. And we always see these talking heads. They're hopping on all, they're doing their circuit talking about how expect markets to crash 50%. I don't see it.
No, they can't. Now, maybe these economic masters of the universe will at some point be proven powerless, but they can't. I mean, they've driven interest rates to nothing. And so every pension fund, insurance company, endowment, institution, whatever, they now, if they don't just own equities, they've got high yield bonds, because they're desperate for yield, all this stuff. If the stock market were to crash 50% and if rates were to go up, it would be you might as well just close everything down. Because, how are you going to fund all the underfunded pensions? For just one little itty bitty example, at the state level, the municipality level, the private pension level, whatever, the extent those are still out there. If the stock market crashes, or if everybody who's desperately trying to pay all their taxes and raise a family and all that stuff, they manage to scrape together 6 figures in a 401k, if all of a sudden that goes back to being 5. It just can't. And in the last couple of times the Fed has taken dramatic action, has been in a stock market meltdown. You go back into December of 2018, the stock market's down 10, 15% and going straight in the tank. They had to change policy, start cutting rates then in 2019. And then last year, everything's fine. We're just gradually reducing rates and the COVID thing kicks in. The stock market went down 30% in 20 days. And man, you got the full freaking money at that point of all the different acronyms and cutting rates to zero and everything else. So the next time the stock market falls, they'll slap on yield curve control or whatever else remaining tools they have in their toolbox, and they'll try to do everything they can to keep it from happening. The only other thing I'd say about gold, because I get this all the time too, and people still get mad at me when I say this. If you're buying gold or silver, that matter, you can buy some and hope that it goes up and the scheme that they price it in breaks down and the whole system delevers and all of a sudden, it's worth whatever per ounce. Knock yourself out. But if you're buying gold to make money, that's not what gold's for. It's like saying, well, I'm going to double the amount of insurance on my house because I'm going to make a bunch of money. What? You buy gold as part of a portfolio to protect you against the madness. And there are a lot of other parts of that portfolio. It's not just precious metal. And again, given the way precious metals are traded, managed, monopolistically controlled by a handful of banks and their traders, you would be a fool to have all your money in just simply one asset, like the precious metals. Given, that type of thing can go on, not necessarily definitely, but for a lot longer than, what's the old Keynes line about longer than you can stay solvent? So you've just got to understand the whole picture. The way the central banks are now working directly with the treasury departments, in this kind of global push to try to keep all these plates spinning and the music playing, and position yourself, as responsibly as you can from there.
Mm-hmm. Well, Craig, I really appreciate you coming on here. You make stuff just from such a from such a common sense perspective without trying to throw around big words and
Well, I can't do,
like sometimes we talk to these guys and there's like 50 to 100 variables they mention in like one sentence, and we're just like my brain's broken. I can't follow what I'm saying. But I really appreciate you coming on here, and I hope you'll continue to join us in the future as we see this monetary experiment play out as a result of COVID.
Yeah. Thank you, guys. It's always a pleasure to visit with you. And again, there it is right there. That's what we do. 11 years now, going on 12, I think. I don't know. I lose track. Excuse me. In depression, I joke all the time, man. In they talk like my dog is 10, but in dog years, he's 70. I've been doing this 10 years, but man, in gold and silver years, it's like 50. But we keep going and try to put it in English, to break it down and keep it simple. And also to try to have some fun, for God's sake. These people that take it all so freaking seriously. If we didn't have fun, I'd already be in my grave probably. Because you got to have some fun. This is such a challenging time to be alive. If you just take it all, you got to be able to relegate it to some extent too, and make fun of people and have some fun. So that's what we try to do at my site. So anyway,
and that's tfmedalsreport.com.
That's where you find us. No doubt about that. Thanks, guys.
Thank you so much, Craig. We really appreciate it. Have a
good weekend. All right. Bye-bye.
Okay. So Mr. J. Lutz, what do you want to cover today? What's exciting in the small cap world? We had Craig Hemke on. I love chatting with Craig. He just really breaks stuff down in a very simple and easy to understand way. And some people might not like when talk is that sort of basic, but I love it because everything he's saying I fully agree with. Whereas sometimes we have these guys on and like honestly, I don't know if they know what they're talking about when they start like trying to go through, the breadcrumbs of all the different variables. And it's just like, yeah, just to be clear here, some of those variables you mentioned are not as black and white as you're making it out to be. So look, I agree with the thesis. Our political system is designed for governments to print. There is a very scary connection between the Treasury and the Federal Reserve, in other words, the central bank, and those who are responsible for the U.S. debt and to manage the U.S.'s money. So that has basically created a system where politicians they can effectively go nuts. So these are unprecedented times, and that like you were saying right before we hopped on, Biden's now asked for, what was it, 1.2 trillion for
I think it's 1.35. I was actually going to try and find it while Craig was on, but I got caught up listening to him.
Let me see if I can find it.
Actually, all I'm seeing is gun control stuff.
And all I'm seeing is stuff about Hunter Biden on porn sites.
I don't know what you Google, clearly.
I'm looking on Twitter.
See, this is how Google works, though, because I'm in the prairies where it's assumed that gun control is an important thing to me. So that's all I see. Like the top 1, 2, 3, 4, 5, 6, 7 articles are all. When I type in Biden, all it is guns. Guns.
So this is from BNN Bloomberg. I'm assuming. Oops, let me get it up here. They did that thing where they switched the browser.
Boeing grounds dozens of 737 MAX. What a year for that company. Jeez.
Can't take the equity analysis of this kid. President Joe Biden proposed major boosts in funding to combat inequality, disease, and climate change as a part of a $1.52 trillion budget request for 2022 as part of his wider push to redefine the role of government in American lives. The administration's office, released by the White House Friday, kicks off a months-long process in which Congress is likely to significantly reshape the priorities given the stiff Republican opposition to many of the proposals. But the outline showcases how Biden is trying to bend the federal government towards a much greater role in the provision of health care and education. Combined with the U.S. $1.9 trillion pandemic relief bill signed last month and a US $2.25 trillion infrastructure and jobs proposal. The budget marks Biden's third foray into using the power of the federal government to radically expand help for lower income and middle class Americans. A further social spending package is also coming, all before Biden's first 100 days have passed. Another social spending package?
So let's do the math on that. 1.9 plus 2.25 plus, what was this? 1.5. So he's gone and spent
1.52.
Call it roughly $6 trillion in his first 100 days.
Trying to. You know
what I could do with $6 trillion, Steve? Like
$6 million.
I genuinely wonder how they cannot get anything resolved with $6 trillion freaking dollars. Like, seriously, how much money do you need to fix issues? Like, it's all going to consultants and shit in this, right? Like, it's ridiculous.
Yeah, you're right. It's like, remember when back in 2009 when the mortgage crisis happened in the US, they were tossing around like $300 billion relief packages,
and people were freaking out. Like, I'll be honest, I was still in high school at that time, and I remember everyone freaking out. Like, it's just insanity. Like, this, if you take out the fat, the amount of stuff you could get done with $6 trillion is outstanding. Truly. Like, where's the money going? It's going to the market. Like, you and I work in the market every day. Everyone knows that. I'll be honest. When it comes to stuff like this, I don't care about the market. Get the people that need the money, and stop trying to pump the market and everything else. Focus on your actual country and not some billionaire's additional $1 billion.
How much of this $2.25 trillion infrastructure bill actually goes to infrastructure? Like a couple $100 billion?
I think it was like 400 billion or something. Now let's be clear. When I'm talking infrastructure, what do you think when you say infrastructure? I think bridges, railroad.
Okay,
roads.
So roads and highways is like 117 billion of the
exactly.
So like almost 10% of the $2.25 trillion infrastructure bill is going towards highways, bridges, and roads. So I don't know. Look, we're getting a lot of people asking us. They're saying Q News.
Yes, I noticed that too. I was actually about to
touch on the Q News, maybe, Jay.
So when I saw this news release, you're just going through them all. When I saw this news release, I felt like my hat got blown right back.
Well, let's get into it.
First and foremost, kudos to Scott Patterson and Kurt Marvis on this. Excellent news. So I'll be honest, we've covered this company for 2 years. And I'll be blatantly honest, I didn't realize the disadvantage that this channel was at in terms of television distribution. Last month, it was still at under 50 million, which is literally under 50% of the distribution that similar channels ran by Disney, Viacom, and the Times of India. Notably, one is MTV, which is, to me, a household name. They all had double the distribution. And like, even looking at week 5 of 21 there, the Q is holding its own before you even realize that they had half the distribution. Now that they have equal distribution, they've literally just knocked the socks off of these guys. To me, a channel beating out MTV in terms of the youth audience. Now, I grew up in a time where MTV was a lot better than it is today. Today, you go to the MTV channel, and I think there's only one show that's only on repeat endlessly. But to me, MTV is an accomplishment to beat. And I mean, notably, Kurt Marvis was actually one of the original people at MTV when it was first launched in the 80s. So I think that's kind of cool how it's a full roundabout. But Q getting these ratings of 13.02 up from 4.4, outstanding work. Truly. Like, that's just impressive.
Well, it shows that there's people watching it. And I don't know. I remember when they were first telling us about how they thought that they'd be able to, compete against these companies, at least in terms of ratings. I rolled my eyes. It's like, you're going to compete against MTV. Look at this. They're They're not
literally blowing them out of the water. And I mean, to be clear, I had the same response. Some channel thinks they're going to come out and beat MTV. Now, I think I think of the glory days of MTV more so than what it is today here in North America. I'll be honest, I don't know what they offer in India, but I'm willing to bet it's better than what they offer here. And like, blown away. They've blown away Disney. Think of the budget that Disney or Viacom or the Times of India would have. Times of India, who recently invested in Q, is the largest media conglomerate in India. So for Q to beat them, it's clear why they received that investment, right?
So let's pull up the chart here. Look at this trading view. I figured out look at this, guys. I figured out charting software.
I never knew why you didn't just use trading view, but I was like, whatever. You want to use something else?
This looks great. I'm going to actually sign up an account and use some trading view, baby.
Change your indicator though, because a line chart makes it look like it's your first day investing.
Well,
to the left. To the left.
To the left. Some Beyonce for you.
Don't start saying that or we'll get a copyright claim. Look at that jump.
Yeah.
JTD's giving you the same.
JTD, oh man, change that to candlestick, Steve. Exactly.
There must be a bit of a delay here because that's funny.
Yeah. So let's keep going here. I mean, this is I thought the Q was when we first agreed to take them on for coverage, I was very nervous. I was like,
to be clear, I think I was the driving force behind bringing them on versus yourself. You were not sold entirely, but I'm glad to say that I'm proud to say they're a client. That's a great accomplishment for them.
It's look, they keep hitting it out of the park, and it is hat tip to them. I am thrilled to see it. What else is in the news this morning that's got you super?
I'll be honest, it was a very, very slow news morning.
It was so slow that I think we talked on the phone this morning.
Exactly. I don't normally have time at all in the morning. My mornings are hell. I get up at 4:30 and I run off my feet until about the end of this show, which my time is 11.
I haven't read this piece yet. Maybe I'll do this live on the air. The
which one?
This is the one that young Justin put out today on.
A nice quick briefer on analysts. You want the summary? Great quarter, guys.
So this is Curaleaf Holdings, the analyst take on the European expansion, done by my man young Justin. On April 7th, Curaleaf Holdings announced a $312 million acquisition of related party European company EMAC Life Sciences. I love that was thrown in the sentence. That would never be thrown in on an original company report. That's what we do differently at the Dive.
Or even B&M Bloomberg. Let's be honest, they wouldn't have that either.
You're getting it from us straight here. And subsequently, they sold 31.5% of the company off to a single institutional investor for US $130 million. So was this 312 Canadian? We got a U there and a 312 there. You see me yell at my editor live on air because I don't know what I'm looking at.
Where are you pointing to?
See there? It says,
the link, and then where else?
It says 312 million, and then everywhere else it says UNC. So what's I assume that the $312 million acquisition was US. Let's have
I believe 312 was Canadian based on share prices.
Oh, okay.
I should put a C in there. That's my bad because I rewrote that line. Okay. So I'll go in and fix that. I want you to skip down to Matt Bottomley's quote, though.
Oh, Matt Bottomley. I love Matt Bottomley.
Yeah, you were ragging on him yesterday, and I just kind of find it funny. We believe the potential long-term optionality afforded by entrance into these geographies could be very attractive relative to its current purchase price. Time while representing an international platform for potential M&A as these markets develop. Did he write this in 2017 or 2021? Because I couldn't tell you.
Matt Bottomley? Matt the Shill Bottomley? Never.
Like, I'm sorry.
I heard that Bottomley's license plate says shill, and I am a shill. I couldn't shill as good as he could, man. He's the top cannabis analyst at Canaccord. So good for him, man. All those calls about Europe were totally accurate 3 years ago, and I'm sure that they're going to be totally accurate today.
You know what the problem with the whole Europe expansion? You think that the European Union is going to let their newfound industry be ran by Canadian/US based companies? Fuck no.
No. like there's a reason that Bedrocan isn't public today. Right, because and this is what we were talking about yesterday, and it's you kind of went on that rant about private cannabis companies here in Canada. Is that there's a lot more appetite for cannabis stock than there is for cannabis, right? So you can't tell me that if Bedrocan could have gone public by now, they wouldn't have, right? So there are things going on there that actually Bedrocan originally started out with.
So you want the background of Bedrocan? Going totally off memory. So Bedrocan is based in the Netherlands. They actually supply mostly cannabis across Europe right now. I know they are supplying for Germany specifically, as well as a few others. Now that may be changing slightly because you got Aurora and Afria with actual grow operations there. Tilray, Portugal, yada, yada. But for a time, and I believe it's still true, but I could be wrong. If someone's out there, correct me if I'm wrong. For a time, they were pretty well a sole source supplier for many, many European countries. Fast forward to the mid-2010s, and at some point, they launched a American subsidiary or a Canadian subsidiary, which was eventually purchased by Canopy. If you guys remember, that was like 2013 or 2015. It's kind of vague, somewhere around there. But effectively, that portion was sold, or it was just the Canadian operations that were sold off. The Netherlands stayed the Netherlands. So they could have gone the public route. They clearly chose not to. And there's probably reasons behind that.
Yep. And it's probably because Europeans don't want to hand over a ton of wealth, jobs, and industry to another country. Like just look into like the history of Trulieve and what they had to do to get their first license. Like people know that there's huge economic value in this industry that is going from black market to or illicit market to legal. And they want a piece of it. Like this is not, I'm not saying that like whatever Curaleaf just bought won't end up becoming a profitable entity, but from a valuation standpoint, like with the absence of knowing what assets they just bought and any data on what kind of top line revenue or sales this company's doing, you can't help but scratch your head and go, yeah, I'm calling bullshit.
Yeah. One thing you mentioned Trulieve. I need to do a shout out to Trulieve. In March, I don't know if you saw this, Steve. In March, they gained 20,000 new customers in Florida. 20,000 new patients. That is a wild figure.
Now this is a metric that people would really kind of get all like hot and bothered about in Canada years ago. But I'm sure that we can like come up with some sort of value of what each customer is worth for Trulieve in terms of like how much we value it from a, just an overall valuation standpoint. And like how many did they have before?
Once ignore my clicking. I do have a new mouse on order because Steve finally lost it on me this morning for my endless loud clicking. Good buddy Michael Miller actually sent it this morning. No, I don't know offhand, but they did have net new hires of 504 employees. So they hired 500 people last month.
Yeah.
Well, so I mean, I couldn't tell you how many they have or the net value on each one, but to me the important thing is they're still seeing growth in a market where they own a substantial portion of the market share as a whole, right? Like it's noteworthy. I mean, most people would think that Florida's getting to be a mature market in the sense of if you're a medical patient, you're probably, if you intend to become a medical patient, you probably already are.
So switching gears here, JTD.
I was about to bring that up.
He says, guys, what's your thoughts on Shaw and Rogers? Because if it goes through, Shaw jumps $10 instantly. What's your take on this, Jason?
Do you want my honest take? I'm taking off my stockman hat. I hate this deal. Absolutely hate it. I haven't looked at the financial aspects or anything of it. The reason I hate it is telecommunications in Canada is garbage already. The amount we pay is some of the highest rates in the world, and that's because I can't say the word, oligopoly, whatever.
Yeah, oligopoly.
Yeah. There's like 3-4 different providers versus what there is in the US where there's endless. And we get hosed so freaking badly, it's embarrassing. On anything from internet rates to cell phone to home phone, whatever you want to pick. I'm in Saskatchewan, so I'm fortunate enough where we have SaskTel, and I'm not a huge fan of government owning telecommunications and stuff like that. However, I like it in this instance because my rates here aren't even comparable to what you pay, Steve. And that's solely because we have 4 competitors here rather than 3, right? I think the last thing we need is a consolidation of telecommunications in this country. And truly, I hope that the deal is blocked.
It sounds like it's hedge funds that are kind of pushing it.
That wouldn't surprise me.
Yeah. All I'm going to say is this: I'm a big Rogers fan. They own my Toronto Blue Jays, which they're honestly so cheap when it comes to owning the Blue Jays. Don't even get me started on that. But I've had some experiences, like from my vantage point, there's 2 companies I can work with in terms of my personal providers. There's Bell and there's Rogers, and I'm always going to take Rogers because the experiences I've had with Bell were far worse than my bad experiences with Rogers. That being said, I am considering moving suburbs, and the suburb I want to go to is currently under Shaw, and I would rather be with actually, no, they're Cogeco. Is Cogeco and Shaw the same thing?
I have no idea.
Doesn't matter. Anyway, so that rant's not gonna be very fun. But look, it's Friday afternoon. I got a packed schedule of people I got to get to. So, Jay, is there anything interesting happening today over at the Dive?
You know what's interesting? It's a Friday, and I'm going to the cabin this evening. So that's what's interesting for me. If you must know, my Friday night is going to be setting up a full computer system at my cabin so that I can work there just as much as I work at home. I'm sure my wife will shoot me when she sees how much I've spent on my new system. But we work 24 hours a day, so that's what you got to do.
Yeah. And JTD, who I've been chatting with all throughout this show. So, well, I'm wearing my Jays hat today to try to break the losing streak. I figure I put this on and good things are going to happen. Jeez, we got TJ Zoik on the mound today. I've been a big TJ Zoik fan for a long time. Big, tall, sinker ball righty out of University of Pittsburgh. Let's go, baby.
I literally have no idea what you just said. None of it.
Of course you don't, but it sounds like your father-in-law is a big fan of the Blue Jays. Yeah, and my father-in-law is a big fan of SmallCapSteve Live. True story.
That's funny. That's really funny.
He watches us every day, and I got to be careful because he doesn't always pay attention to the disclaimer I'm about to give, which is we are not financial advisors. Nothing we talk about on this show is designed to be advice. This is not a buy. We're not giving buy recommendations. We're not giving sell recommendations. None of that. If you're looking for somebody who can do that, go find somebody who's licensed, not somebody like myself or somebody like Jay here. Look, guys, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with myself and Jason Lutz of Saskatchewan.
Have a great weekend, guys.
Have a great weekend, everybody. We will be back Monday breaking down Canadian small cap and venture market news. Thanks for joining us, everybody.